So a topic that's really creative that a lot of hard money lenders don't tend to get into are self-directed IRAs. It is something that in our business we have experience with. I'm not sure of anybody else in our market. I don't think down here in your market either do these kind of projects. And a lot of it just came from experience and how to do it. The big question is, well, because you don't sign a personal guarantee with a self-directed IRA, can you do this? We can. We have and we do. So Jay has a lot of experience with that, so I'll defer to you on how you typically look at those.
Yeah, I would say over the last 5 to 10 years, self-directed IRAs become very popular. You know, it actually gives you the ability to be an active investor with your retirement account, with your IRA or whatever, or 401k, whatever the case is. So instead of just giving it to some money manager or stockbroker or third party whatever vendor, get a small rate of return, you can be active and you can control it yourself. Obviously, there's regulations around it, so you're not self-dealing. You can't say I have $100,000 in my self-directed IRA, just give it to me in cash and I'll just do what I want with it. You know, it's got to be with a custodian. We can recommend a lot of custodians too, but that's a different topic. But the transaction works similar to this. And first, a lot of other lenders or banks for that matter will not do this because it has to be a non-recourse loan. Your IRA can't personally guarantee it. I can't go after your personal, your IRA. And so you can't physically personally guarantee the loan. But what do we care if the loan structure right at the right LTV? Think about it like this. Would you rather lend somebody 65% LTV with a personal guarantee or 50% LTV without a personal guarantee? That 15% extra equity is probably more powerful than that your personal guarantee will give me anyways, right? So we might as well go that route. A lot of people, again, a lot of these topics have been creativity. A lot of people just don't understand it. But I mean, imagine the power of taking your self-directed IRA that you have, and it may not be a substantial amount of money, but you lever it up with a hard money lender. So you're buying a property for, you need a total of $100,000 to be in a property acquisition and construction. You say, hey, my IRA has $40,000 on the deal. Cool, you put up $40,000 in the deal, we'll come in, we'll put up $60,000. We'll meet all the requirements that your custodian requires, pretty easy. That's all paperwork stuff. And then you go to flip the property on that metal for 150 grand, maybe you make 30 grand. You juice your IRA $30,000 from original $40,000. How long would it take with a $40,000 IRA to get up to $30,000 more in profit?
Yeah.
Forever, right? Now, obviously, you got to stick by the guidelines. You can't take any of the money on your personal names. And to be honest with you, it's a little bit more clunky because every time your contractor needs a draw and you got to write a monthly payment, you got to go through your custodian to do so. But it's a small price to pay for the huge return and the huge opportunity in order to do a deal through your IRA. Especially, it could have been a deal that you might not have been able to get anyways. So if you are not into self-directed IRA investing yet, check out some of the companies, Google self-directed IRAs online. It's a really quick process and do your thing.